Now there's like fake it until you make it, and then there's whatever this is.
There's a term for it, Kyle. Do you know what Flintstoning is? His car doesn't go, it's his legs underneath, like going like that.
A 2026 plan that I am literally talking to my board about in 2 days. Number one on the plan is, how do we accelerate product adoption? We lived in this world for a while where that threshold was kind of increasing on a pretty consistent basis for most categories. AI has kind of basically dropped a giant bomb in the middle of this.
CJ was very excited that you agreed to join the podcast because he's a bit of a fanboy.
Time and time again. You know, if you were in the mobile battle, if you bet just on the iPhone, you had a chance at winning. If you bet on one of the other platforms, you clearly lose. Or even if you spread your bets out, those were also the clear losers.
From Mostly Media, it's Mostly Growth. Go-to-market strategist Kyle Poyer and CFO CJ Gustafson share smart takes on growing revenue and running a company. Pricing, unit economics, AI, leadership, candid insights for CEOs, CFOs, and CROs, or anyone else aspiring to climb to the C-suite. This is Mostly Growth.
Hey, thanks for listening. We'll be right back after a word from our sponsors. As a CFO, you're expected to bring clarity to everything, including how your company manages ownership. The tools you use should make that easier, not harder. But when they come with hidden fees, data you can't always trust, and support you can't rely on, you end up with more frustration than clarity. That's where Pulley comes in. Pulley is a cap table management platform built for finance leaders who need accurate, decision-ready data from a system that works for your business, not against it. With Pulley, you get intuitive workflows, audit-ready reporting, and support you can count on, all backed by predictable pricing you can plan around, so you can stay compliant and make smarter decisions about your company's future. Manage everything from fundraise modeling to ASC 718 reporting to custom liquidity programs, all on one trusted platform. Hundreds of high-growth companies like Linear, Fathom, and Runway trust Pulley to help turn ownership into a strategic advantage. And joining them is now easier than ever. You can switch to Pulley in as little as 5 days. And for a limited time, they're offering 25% off your first year. To claim your exclusive offer, visit pulley.com/mostlymetrics. That is PULLEY.com/mostlymetrics. Please, guys, I really need this. Pulley.com/mostlymetrics. You just launched a new AI product. The new pricing page looks great. I'm talking crisp. But behind it, last-minute glued code, messy spreadsheets, and running ad hoc queries to figure out what to bill. Customers get invoices they can't understand. Engineers are chasing billing bugs. Finance can't close the books. Well, with Metronome, you hand it all off to the real-time billing infrastructure that just works. Reliable, flexible, and built to grow with you. They turn raw usage events into accurate invoices, give customers bills they actually understand, and keep every team in sync in real time. Whether you're launching usage-based pricing, managing enterprise contracts, or rolling out new AI services, Metronome does the heavy lifting so you can focus on your product, not your billing. That's why some of the fastest growing companies in the world like OpenAI and Anthropic run their billing on Metronome. Visit metronome.com to learn more. That's metronome.com.
Welcome back to another episode of Mostly Growth. Joining us today is Brian Balfour. Brian started Reforge in, I believe, 2016, which is, well, almost 10 years ago. I remember it as a learning resource for growth teams, but I was on the site recently, and it's now a full platform for AI-native product teams. We'll get into that with Brian. And before Reforge, Brian was VP of Growth at HubSpot, where he took the company from a single product company to a multi-product platform. This comes from stalking Brian's LinkedIn. I saw his first foray into being a founder was starting a college-specific social network in 2003. And his first PM role was at ZoomInfo in 2006, where he added social features. So you can either thank him for that or blame him for that. Welcome, Brian. Did I get any of that right?
That is right. Mostly right, just like Mostly Growth. So I'm interested what actually falls outside of the growth part into the mostly.
The other things are CJ's rants about people he runs into in various parts of Florida, I think.
Knock-knock jokes and CAC payback period calculations.
Okay. Sounds good.
Brian, so, I know you as founder, right? You've been founder and CEO of a company for 10 years. So you're building a business, but you're also like a prolific writer and inventor of new frameworks. How do you do both of those things at the same time?
Not very well. So, the writing is incredibly sporadic. If people are subscribers on my blog, they will know that there is no continuous stream or routine of things. I am fortunate that for a large portion of Reforge's life that the two went hand in hand together. I do think it's one of the things that has paid the most dividends for me in my career. Yet I look back and I regret not investing even more into it, even kind of going way back when the writing is how I met my first investors in my first venture-backed company. Writing is how I met my co-founders in my second company. My blog is how all the HubSpot founders and executive team came to know me and kind of what led to that job. The writing is kind of how we found our first, I don't know how many customers for Reforge. So it's just like I look back at every pivotal moment in my career and I can kind of like first touch, last touch UTM source has been the blog and the writing. Yet I still find it hard to make time for it and do it continuously. So it's definitely a challenge.
What I find great about your writing is that it's not just, observations of what's happening. It's like bigger frameworks around it, or like the 4 fits framework, which I think was a great evolution beyond just thinking about product market fit, but understanding like the different degrees of finding product market fit and what that actually means over time, or, growth loops as frameworks. But is there a framework that stands out to you as like the most evergreen, the one that everyone keeps kind of coming back to you for?
The most popular one that I've written by all accounts, whether it's mentions, views, whatever you want, is definitely the 4 fits. That one's kind of, funny enough, in the last year, has kind of made a resurgence. I don't know exactly the cause for it. I did do an update to it, but I saw the resurgence even before that. And so it's definitely the most evergreen one that people refer back to. And I think at the end of the day, all of these things are just a way for me to make sense of very amorphous topics, not just make sense of them, but communicate them to others. And so almost all of the writing has started from a standpoint of I'm either making sense for myself or I'm trying to make sense and communicate it to others in my job or in my company. And then it kind of turns into writing. I don't really necessarily set out to be like, framework maker or however you want to describe it, if that's a job title. But because I think a lot of things that we do in especially startups are messy. And there are these like concepts that at first glance sound simple on the surface, but when you're actually in the thick of it, it's very complicated and much messier than kind of how it lives on the page. And so I, in my own endeavors, have tried to pull out a little bit more of the nuance and turn them into tools that either myself or others can use on a repeated basis. Now, the flip side of this is that you get the chorus of folks on X or, r/product management or, whatever subreddit you want to go. And they're like, who are these people like Brian Balfour just making up this garbage frameworks? It's not how like it works, like all that kind of stuff. And you definitely get the flip side of it. Like a lot of people consume these things and view these things incorrectly. They view them as answers. And I view them more as tools to use to get to a better answer. And so with any kind of tool, you have to combine it with some set of like raw ingredients that you have available to you. And if you combine those two things together, then you can get to a better answer. But it's not like the answer appears out of nothing. You actually have to put work and effort. You have to combine it with other things. And so it's a way to kind of stand on the shoulders of those who have been through these experiences before and have helped codify it into something simpler. That doesn't mean that it's codified into an answer for you. And I just often find a lot of disconnect. And as a result, folks tend to write these tools off almost too simply.
Yes, well, the downside of writing a lot online is that if your writing is successful, everyone has an opinion about it.
That's fair. Yeah.
For better or worse.
The trolls come out no matter what.
the worst thing is actually no one talking about you, because that means no one's paying
That's
attention.
fair. Yes.
But one of the things that, I think struck me about the four fits framework, and I think why it's having a resurgence, is that there almost used to be this like misconception that product market fit was a, binary thing, like you had or you didn't have it, but also something that once you have it, you keep having it for at least for, a long period of time. And now it seems like, I think you've called it a PMF treadmill. You have to stay on this treadmill that kind of keeps getting turned up to maintain product market fit. And there can be some technology shifts that take folks from having PMF to maybe seeing a PMF collapse. And I thought that's just a super interesting concept for right now, given, the rise of AI products, but also just the kind of rapid change in market environments. But would be curious to hear what observations led you to kind of this concept of PMF collapse and the PMF treadmill.
Yeah, there's actually two components of it. Or kind of mistakes around it. There's one is that thinking product market fit is binary. You mentioned that it's constant. The second part of it, which is what the four fits really talks about, is it's like the only thing, like once you achieve it, that's all you kind of really need. And both of those things are incorrect. I think on the first piece, the concept of the treadmill actually came from Casey Winters and Fareed Masavat, who did the Reforge product strategy course. They came up with this concept of the treadmill because we have these visuals, these graphs, which is that PMF is more like a threshold, right? So there's some threshold that you have to exceed in order to have product market fit. And, a lot of 0 to 1 work is about finding where that threshold is. Are you able to build the right product, choose the right market to get above that threshold? There's actually two variables there. You could actually change the market, or you could change the product to move that threshold around and stuff. But then once you exceed that threshold, if we graphed it out, is not like a straight line across. It's actually a line that constantly continues to increase over time. The reason it continues to increase over time is just because of relative competitive pressures and kind of progress in products, right? So your customers' expectations are always increasing over time. You have zero control over that. They are always increasing over time, either because you have direct competitors that are building things to increase them over time, that technology in general gets better over time, and more importantly, that they start actually using products in other places that increases their expectations. So you kind of see this dynamic mostly in B2B to B2C software, which is as the quality is more and more consumers use B2C software and get used to those dynamics, they expect the B2B software to be simpler to use, to have similar UI, to use similar modern technology. So it's not even direct competitive pressures. It's just like these things increase over time. And so as a result, you are constantly on this treadmill to not only kind of keep up with how that PMF threshold is accelerating, but actually try to widen the gap between you and that threshold. That's kind of really what creates things. Now, the interesting thing is in this dynamic, or in this world, the AI world, is that we lived in this world for a while where that threshold was kind of increasing on a pretty consistent basis for most categories. And as a result, it was, once you hit that PMF threshold, kind of layering on other things to kind of keep up with it, was a more quote unquote predictable exercise. AI has kind of basically dropped a giant bomb in the middle of this. And as a result, we've seen that threshold rather than increase consistently in some categories, basically hit this inflection point, like basically spikes, it goes straight up. Of course, the classic example that we pointed out and then has been repeated a bunch is Chegg. So, ChatGPT came out. It fundamentally disrupted how users were achieving and solving the same problem that they were solving in a much faster, more personalized and in other ways. And because ChatGPT grew so fast, right? It's not like it had a long time the expectations kind of adapted incrementally over time. They actually changed in a very short period of time, creating this spike feeling. So as a result, Chegg just ended up in this negative flywheel where they didn't really have time to respond and to adapt to this big change, which is pretty interesting because they experienced one of these moments in the company previously, which was a shift from physical textbooks to digital textbooks. But the time that that took was actually much longer. So they had a much longer time to adapt. Unfortunately, it's ended up kind of where we sort of predicted and expected a year ago. I think they laid off since the beginning, like over 80% of their staff. Like founders kind of stepped back in to try to reboot the company. They have completely pivoted to a different segment of the market. They're now in the professional training market, similar to Reforge.
Less rapid change in the professional training space. But I think what's interesting to me about this, so with the treadmill, I think of the CRM category as being historically really hard to build something that competes against Salesforce and others, because there's this set of expectations where in order to be a viable CRM for a business, the number of table stakes features that people just expect is like, there's hundreds of these things that people, are almost checkbox features, but people expect in a CRM. But I think what's kind of exciting about this concept of PMF collapse and the change of markets is that now there's maybe this idea of what a CRM is and what you need from a CRM maybe changes with AI, where you have a database and you have systems of action and workflows. And so, we're maybe going from this period of the treadmill, being on for, 20 plus years with CRM and having to build all of these things to be a viable CRM, to now being in a position where there's maybe new markets emerging where we could think about what a CRM is differently. So there's I guess there's a challenging part and an optimistic part of the PMF collapse and these phenomena that keep happening. But
Yes. Yeah, there's two sides of these coins always, right? Like wherever you see somebody crashing, it's typically the result of somebody kind of exploding in a good way. On that CRM note is, we wrote this big blog post about a way to assess your risk of PMF collapse, and it kind of comes down to like a dozen different factors, right? Switching costs being one of them. Right. So the higher the switching costs, the lower the risk you are. But that's just like one of a dozen factors. Right. And you compare that to Chegg, like the switching costs were so low. And another factor was their audience was early adopters. Right. Like the kind of younger audiences. That's another factor. The more early adopter your target audience is, the more at risk you are of these types of dynamics existing. But I think in the CRM market, it actually points out something really interesting, which is that in the CRM, you kind of build for two different audiences. This is kind of true for a lot of B2B software right now. AI CRMs, quotes, that are going after markets where they are trying to do a rip and replace of a Salesforce or a CRM. And I think the dynamics that you actually see there are people are still coming to the table with a bunch of the same feature requests, the same product requests as they had in Salesforce or HubSpot CRM.
And as a result, want all the AI stuff.
Yeah, as a result, as these AI native CRMs actually look like almost like AI tinted CRMs. There's a whole other class of products, and disclaimer, I'm an investor in a company called Data AI. It's started by a couple guys I worked with at HubSpot on the HubSpot CRM, which targeting much more of a market of people who aren't trying to do a rip and replace, but they're much kind of younger companies truly like operating in an AI native way and have a totally different set of feature requests. Now, these two things are different because actually in that second category I just described, it's not a tool change. It's a complete workflow and way of operating change. And as a result, like you target those folks that they're going to pull your business in a very different direction than the first group that I described. But they all have trade-offs. They all have pros and cons, right? Like first group I described probably is a larger market at this moment in time, right? But the second group, it's a smaller market, but you're kind of taking a bet that this is the way that all companies will operate in the future. And so it's more like you're waiting for that all boats rising tides, right? Like you're waiting to kind of catch that wave as it comes in and requires, I think, a lot more patience. And so I think we could break down every single category, not just the CRM category. And I think you see this dynamic playing out in both, in everywhere.
Yeah. So if you think about the way that a P&L is traditionally constructed, you have your cost to serve your customer. So revenue less COGS is your gross profit. And we've always thought about it like that's how you show scalability in your model. That's how you show leverage. And everything that's in R&D, you can spend a ton more there. You can burn more. It can make your profit margin look worse because that's all for future growth, et cetera. But I think with the collapse of PMF, and this is my takeaway from reading your piece, just as someone who thinks about allocating money within a company, more and more the R&D component is actually the cost to serve your customer because they expect more and more over time. It's not like you give it to them and the product stays the same. It's kind of like you're graded on this sliding scale and you have to keep investing in your product and creating new stuff in order to keep them around. It's very much, I think, at the top of the P&L more than I thought towards the bottom.
It's actually partially why HubSpot, I can't talk about the most recent years, but at least while I was there, we always invested way more in R&D than the comparative benchmarks for companies our size. I can't remember as a percentage how much more, but we very much believed we didn't have the name to name these things, right? Like at the time, like I hadn't come up with those things, but from a principle and approach perspective, it did end up working out that way in terms of how we thought about keeping up with customer expectations and how we invested in those things. It's interesting to think that there's been a bunch of firms and companies that have honestly made a decent amount of money by coming in and cutting our R&D and efficiency in a bunch of other places because of like high switching costs and because of a bunch of other things. I think we're now seeing opportunities to take market from those places.
I find it fascinating that even more so now, customers are buying your product not just for what it does today, but what they believe it will be able to do for them.
100%. Tomorrow. We see this a bunch in Reforge, yeah. And we actually guide on it too. It's like we're very transparent in our sales process about here's where we're going with our tools. Like we want you to align to that future. That does a couple things, at least from our perspective. I think one is it prevents possible future churn, which is, bad. Two is that it makes sure that we're getting the right customers in the door that are going to pull us in the right direction. Three, it actually also helps us counterposition a bit against our competitors because we have 10x the product velocity any of the competitors in our categories right now, and we show it and we back it up and we prove it. And look, we just go to them, we're like, do you want to go with the company that shipped 2 things this year or literally shipped something major 2 to 3 times like a month? So and we show them the list of things and the side-by-side comparisons and stuff. And I think that's right. And even our own adoption of tools internally at Reforge is we've very rarely centralized around a single tool because things are changing so much and we don't know exactly where some of these are going. But in the cases that we do centralize, we want to know, okay, where are they going? Does that align with how we want to operate as a company? And we are very much kind of picking for the future, not just where they're at today. 100%.
Yeah, I think one of the interesting challenges for companies that hasn't really been a challenge before, but I think I saw a post from you about this, that it's going to become a challenge for many companies going forward, is communicating about the roadmap and all of these new features. So if you're launching, a big release multiple times a month or maybe even weekly, by the time you've gotten through a year, you have dozens and dozens of launches out there. And the reason why someone came to your product in the first place is, very different from what you have available now. And so how do you keep educating that customer and drive adoption of ongoing features? Like, how have you thought about that, especially as a company pivoting from, more of the traditional learning and community and professional development space to increasingly an AI product company?
In this past year, we've launched 5 major new software products. We actually ended up sunsetting one of them, right? And so, but right now we have a portfolio of 4 software products. One is Reforge Insights, which aggregates, analyzes all of your customer feedback, plugs it into your workflows. The second is Reforge Research, which helps you capture new customer insights we have like an AI interviewer product. The third is Reforge Build. That's our prototyping product. It specifically helps you prototype on top of an existing product rather than doing kind of the 0 to 1 app building that a bunch of these other ones do. And then the fourth is Reforge Launch, which is helps you kind of launch, manage, analyze all these AI features, these non-deterministic experiences. We did this with a team of about somewhere between 20 and 25 folks. You would have asked me if we could have done that a few years ago. I would have told you were absolutely bonkers and crazy. And so, but look, strategies today kind of need to be bonkers and crazy to compete. That's kind of what I've resolved myself to, is like, if your strategy doesn't feel kind of bonkers, then you're probably not pushing hard enough. We've launched all of those, plus a ton of updates to each of those products. And we have definitely are experiencing, like, our product velocity is outpacing our product adoption. And I'm seeing this in a bunch of other companies as well. I think that there's actually three big pillars to adopting AI, especially in product teams. There's product discovery, that's figuring out what the hell you should build and launch. There's product delivery, which is actually like generating the production level code and kind of getting it out there. And there's product adoption. And just due to the nature and the strengths of AI, as well as companies' priorities, everybody has been very quick to adopt AI in the product delivery pillar. That's why you see the rise of the cursors and the Claude codes and all of those places. And but the challenge with this is that our job is not to produce more code. Our job is to produce more product value that our customers adopt. Like, those two things have to be true at once. So if you apply AI only to one of those pillars, you actually just move the bottlenecks, to one of those other pillars. And as a result, like, companies need to be thinking a lot more about how do I adopt AI on all three pillars at a roughly equal rate if they actually want to impact that outcome of more product that my customers adopt. Now, Reforge, internally ourselves, we've done a very good job on those first two pillars this past year. That's been our big focus, was where we were basically landing all of these products. We were kind of getting them out there. And our next year, lot heavier investment in that third pillar. I have not solved the challenge yet. It is my challenge, my 2026 plan that I am literally talking to my board about in 2 days. Number one on the plan is, how do we accelerate product adoption, go to market velocity? How do we get the velocity of that pillar up to be equal with the velocity of our other pillars? Because it's definitely unweighted. Now, the challenge with this that I haven't actually solved yet is, out of those three pillars, the one that is slowed down the most just by speed of humans is product adoption. You can accelerate things towards the speed of computers with AI, but the ultimate bottleneck is us and what we're doing as humans. And so I actually think the bigger levers on product adoption will not be how to automate certain things and creation of certain things. That's not the pain that I'm feeling. The pain that I think is going to be much tougher to solve is, as buyers, as adopters of things, right? We only have a limited bit of time. We still have to build habits on new products. We have to change the psychology of people, how they think about you, how they think about the alternative, like all of those things. That's actually where I think the real leverage is going to come from in how to do this. I don't know exactly how to do it yet. I'm in the figuring it out, but I am open to ideas. if any of you
thankfully,
have
I think once you do figure it out, you're going to make a really great framework, which is awesome.
This
but
is when I almost feel like I
got
got to keep secret. But we'll see. We'll see. I'm usually very open and sharing.
Yeah, we'll check back in next year. And I know, so CJ was very excited that you agreed to join the podcast because he's a bit of a fanboy. And I'll let CJ take it from here.
This is great because Kyle teed me up in a very kind way this time. We had Emily Kramer on last week, and he was like, "Hey, CJ, meet Emily. Can you insult her as a CFO now?"
Oh, wow. All right.
So this is great.
I'm up for some
You're
insults.
paraphrasing. You're paraphrasing.
Well, Brian, you've been living rent-free in my head since June when you released the next great distribution shift. It was my favorite piece this whole year of all of 2025. My only complaint is it didn't have a clear answer at the end of it, because this really, really impacts my business.
Yeah. What answer are you looking for?
Well,
He wants one platform that he should just spend all of his time, and that is going
that's
to
what I'm
be
looking
helping
for.
him grow his newsletter.
And you hinted at it. But this truly was a great piece on the platform cycles. And it felt like such an aha moment for me to go through and actually apply the open, grow, close, and monetize to each of the different networks that I've experienced over the last 10 years.
Mm-hmm. Yeah, I think a lot of people were looking for an answer. Look, I made a very clear prediction. This was before ChatGPT apps, but my prediction was it was going to be ChatGPT, and I had a big explanation for why. Now that some time has passed and they've released some more things, I would put even more chips on that bet, me personally. Though I did try to provide a bit of a framework and a follow-up post of how I would evaluate it if I was in everybody's individual's shoes, because the answer is not going to be the same for everybody. The answer will be different depending on who your customers are, what your product is, all of those types of users. Because besides the big players in these experiences, the ChatGPTs, the Geminis, Claudes of the world, right? There's a battle for that. But there's also kind of this sideshow going on where there's these other new platforms or experiences that are emerging, like Cursor, that I do think will have very similar type of app platforms and will be distribution channels for certain types of businesses if you are targeting those customers. So in the same way that everybody's kind of focused on the battle of the big behemoths, I actually think there is going to be some really interesting companies made by taking a bet on some of these sideshow platforms as well.
And Brian, just to back up for the benefit of listeners, can you maybe just go through what this brutal pattern is that's happened over different platforms here?
Yeah, I wrote 3 steps. There's actually 4 steps in the post, right? So we've been through these cycles so many times. Most times there's a technology shift. There's also a distribution shift, meaning a new way to distribute your products to your actual customers. And that distribution shift is sometimes as equally as disruptive as the technology shift itself. Now, the AI with the technology shift came a few years ago, but the distribution shift hadn't happened. And that's actually pretty normal. The distribution shift actually, it tends to happen about 2 to 3 years afterwards, right? And so we've seen this play out time and time again. So when the distribution shift happens, it goes through these 4 phases. And knowing the phases is really important to know how you play the game. I'll call it phase 0 is kind of the ingredients for these things to emerge, which is, okay, the technology shift happens. It's pretty freaking clear that there is going to be some new huge type of consumer and user destination. Like it's a consensus idea. And as a result, you tend to have somewhere between 5 and 7 major players start to battle it out. Now in AI, that's Google, that's Meta, that's OpenAI, right? All kind of stuff. But you can look at all the previous shifts too. In social, it was Facebook, it was MySpace, Friendster. It also happened in mobile. Everybody remembers Apple, Android now, but there was a bunch of people. Facebook even made an attempt at it. Amazon made an attempt at it. And then phase 1 is like, okay, one of them really figures out what is the moat, what is the defensibility, the thing that they need to basically hit escape velocity away from the others. And then once they figure out what that moat is, they tend to go through this open phase where they either invite developers, contributors, it could be content, it could be applications, all that type of stuff into the environment. And as a result, what they do is they extend all of their use cases much more quickly. All of those apps, all of those other people bring in more consumers, they bring in more engagement. They help create more of the moat. And then once there's clear escape velocity, that platform then tends to go from open to close. They start to either levy a transaction fee or they shift organic traffic to paid traffic. There's a number of different ways to tax the system. And as a result, it becomes much more closed. So it goes through this cycle every single time. It happened in social. Facebook went, I had a company that had a bet in the space and experienced all phases of the cycle. We then shifted to mobile and unfortunately experienced all the phases again, right? So I kind of got punched in the face twice before I really learned my lesson. But this happens over and over and over again. And it is 100% happening again with AI. You see OpenAI launched the ChatGPT apps platform. We can talk a little bit more about this. We will 100% go through an open phase. Their mode is about memory and context. So you can see this in the value exchange when you install these applications. If you go dig in a little bit deep, which is AI models have commoditized, right? So the platform that owns the most of your data and context will be able to produce the best output for you. And if they're able to produce the best output for you, that's going to lead to you engaging more and more into that platform over time. So they kind of figured that out with memory and context. But you can see this with their early application partners. When you go to install it, there's a little screen that says that application is getting access to your stored memory and context in ChatGPT. So the app gets some of that context to produce a better output for their user, which creates more usage on the platform, which lets OpenAI capture even more and more context and memory about you, right? And so this is gonna keep widening the gap of the outputs that ChatGPT will be able to produce for you compared to all of the other platforms as they know more and more and more and more about you. That's kind of the game that we're going through right now, and that game's going to play out in other places as well.
OpenAI and specifically ChatGPT going through this cycle right now, but becoming a dominant platform. If you were to think about some of the platforms that could be next, so if you were in go-to-market or product and you might want to build for emerging ecosystems or platforms that haven't yet closed, but maybe are riskier, but are more open, what are some of those emerging platforms that you'd bet on?
Once again, this all comes down to who your specific customers are. There's the mass market platforms, right? And that battle is, I don't think we're going to see a new player there. I think you're looking at one of the 5 players that are fighting it out right now, and you're taking a bet on them. At the end of the day, there's probably will only be 2 at most left standing with any kind of significant traction. That just history kind of shows that that's what it kind of consolidates down to, 1 or 2. And so you're more kind of taking a bet on that. And we're still in the early phases of that. Like you can play around with your own ChatGPT app and kind of experiment on your own and stuff, but they haven't opened up the platform. They've clearly said they're going to open up the platform. I've talked to a bunch of the early partners. That game is still coming out. And I imagine one of the other platforms, whether it's Gemini or Claude or something like that, will counter with their own version of this. The question will be, well, does it matter? At the end of the day, I'm actually of the belief that it doesn't matter, that I think, like it's OpenAI's world and we're just all living in it at the moment. But who knows, right? There's always surprises around the corner in the AI world. So that's kind of one set of bets you're taking on. And a lot of times people sit there and think, well, I'm just going to diversify across all of them and let the winner emerge. Yeah, it doesn't work like that. I'm sorry. Most people, especially early stage startups that benefit the most from these distribution shifts, don't have the resources, the time to actually diversify their bets. Like they actually have to choose one, be all in on it. And if they're right, they make the gains. And that's actually been proven true time and time again. If you were in the mobile battle, if you bet just on the iPhone, you had a chance at winning. If you bet on one of the other platforms, you clearly lose. Or even if you spread your bets out, those were also the clear losers. There are all these, once again, like these other, I think, smaller ecosystems that emerge, and it really depends on what type of business that you're building, right? Like I do think new developer experience like Cursor and stuff will be pretty sustainable. They will draw a lot of habit. They will draw a lot of usage of that specific crowd. And so if you are roughly targeting that customer set, there is some kind of play there with like the whole agent platform that they've been talking about and signaling about. But I think there's going to be new ones in all of these kids, just like Salesforce is a channel for a bunch of new businesses. Maybe one of these new AI CRMs that we were talking about earlier, you take a bet on one of those at some point. But so I think that tends to be roughly 2 bets. You have to take a bet on a major platform and maybe a minor platform, depending on what type of product and business you're in. The second one that comes out with the platform will tend to in order to attract developers or contributors, will make the value exchange look more lucrative. MySpace, a bunch of others kind of did this in the early social days to try to incentivize and pull people over to the platform. I actually think those incentives are a sign that those folks are so far behind that it doesn't matter. Like you could take the incentive, but your time is actually wasted.
Yeah, to your point, I was talking to the growth team at Webflow and how they're optimizing for AI discovery right now. It's becoming a very sizable source of leads for them. And even just looking at LLM referred traffic, it's one of their top and fastest growing channels. But then within LLM discovery, more than 90% of the share is ChatGPT. and then just a couple of points are Perplexity, Claude, Gemini. I don't know if that's just Webflow or if others are experiencing this, but it's wild just how different that level of demand and kind of high intent traffic is on ChatGPT relative to other platforms.
And just to be clear, like OpenAI has bets across multiple distribution shifts. So the shift from search to AEO, right, is shift number one. That's pretty clear and obvious at this point. And yeah, there's this whole debate about is AEO different than SEO? Well, it's missing the point. The point is that a huge part of your target audience has shifted their time spent from one area to a new area. And they're not only spending more time in there, they're behaving differently. You know, you have to be where your customers are and as a result adapt. So that's number one. Number two is the app platform, right? And that's kind of still developing. But they also have these other bets, which is kind of crazy to think about, which is they have Sora, which is kind of in the lane of social. I have no idea like where that ends up going, but it's interesting that they are going out there. And they've been actually very public that they have a device bet too. So maybe they go after the phone mark. So that's why I kind of say I feel like it's OpenAI's world and we're all kind of living in it. They don't need all of these to play out, but it is interesting to see that when I talk about the distribution shift, I'm not just talking about the first category. I'm talking about all the distribution channels collectively.
All right. So, Brian, I know that you're doing a lot of hiring over at Reforge. You're probably looking at a lot of resumes. I think Kyle even mentioned you're hiring a go-to-market engineer. I'm not really sure that exists yet, but Kyle keeps telling us all it does, which is pretty neat. So, I'm terminally online, and I saw the CEO of Replit retweet a resume that he looked at. And this guy, under interest, he actually put his powerlifting maxes on there.
I like
this guy
this.
squats 365 pounds and benches 275. Deadlift, wow, 475 pounds. Brian, would you be impressed by this? Would you hire this man?
Yes. Well, no, I don't know if I would hire this from this guy, but I think would I be way more interested in this resume versus one of the AI slop auto-generated things that I get? 10x, yes. Like we don't even post a bunch of our jobs at this point because we know that we're just going to get AI automated crap, and it's more time for us to sift through it than trying to find maybe the needle in the haystack there. So I don't know. I don't know what role this is for, but it at least shows some personalization and humor and other parts of it. So this would catch my attention for sure.
You got to start putting your job postings in gyms.
Yeah.
If you're a High Rocks competitor, send me your High Rocks times, and I'll know you listen to this.
Do you guys use an AI note taker at all by chance?
I use Fixer because you recommended it.
Nice.
Fixer.
Brian, do you use one?
I haven't heard of Fixer. What's the 10-second pitch?
So Fixer's like an email, calendar, and note-taking kind of app all in one. So it's kind of Superhuman, Granola, and I don't know what the other one, and Calendly, I guess, all in one AI app.
I do. I use Granola. Yeah. So as is most of our team, I think. We also use Gong on the sales side as a thing of habit, but we'll see how long that lasts.
Yeah, I feel like Granola is the darling these days. Well, I keep getting shocked at how big the market is. And Fireflies is another company in the space. They have raised at $1 billion valuation. And recently they shared some of the backstory of how they got there. And the founders actually pretended to be an AI note taker before they had an AI note taker. They joined meetings on mute, take notes by hand while sitting silently, and then send the AI generated, in quotes, notes 10 minutes later. Now there's like fake it until you make it, and then there's whatever this is, which is wild to me.
Yeah, do things that don't scale, man. This makes sense.
There's a term for it, Kyle. Have you heard? Do you know what Flintstoning is?
I saw Ed Sim called it that. I love that analogy.
His car doesn't go. It's his legs underneath, like going like that. That's what they were doing.
They were Flintstoning.
I like that.
At Theranos, this was just called fraud, but it's different in AI.
Fair, fine line between those. This makes sense. I'm surprised by the market size too. Did they announce revenue with this or ARR? I'm interested.
I did not see it, but if they're worth $1 billion in a category like this, I have to imagine they're, getting close to 100 million ARR.
Yeah, I mean, I've seen the metrics on multiple of these, and like all of them close or above 100 million in ARR. So every knowledge worker is essentially the TAM here, right? Like the TAM here is every single knowledge worker, and maybe beyond that too, maybe beyond the knowledge workers too, over the long term. So it's an incredibly wide market, but just like I think like AI coding, the vibe coding and stuff, I think this is all going to segment and specialize over time. And so I'm interested to see how it all, and how all these players end up chunking up to create more defensibility and higher price points and stuff.
Pulley, the Lie on Everything app, they just pivoted to this.
Yeah. So
when in doubt, be an AI note taker. There are some actually interesting companies in vertical specific note taking spaces, like AI note takers for wealth advisors or in the medical space. And I think it's kind of a cool wedge to become more of a system of record for these companies and firms.
Yeah, I mean, there's essentially two directions. This either becomes a feature of some vertical kind of SaaS software stack, for a specific audience, or these things expand horizontally into whatever the replacement is for the Notions and Google Docs of the world. Like that probably ends up being the two paths.
All right, Ben, do you want to bring us home with the intro of something I tried this week?
Sure. Yeah. Every week, the fellows, they try some different things. And this week is no different. Does any of you three got something you tried this week that's worth talking about?
I tried something partially because it's trendy, but it sparked my curiosity. Have you guys heard of a company called Gamma?
Yes.
So it's trying to be an AI native PowerPoint, essentially disrupting the product that has been around for decades now. We all love and maybe hate, and they've claimed that they've hit 100 million ARR profitably and with 50 people. They also just raised a bunch of money to go after this opportunity. But I was curious to give this a try. One of the things that I actually really liked about it, so when you go through the onboarding, most apps these days just drop you into a prompt bar UX where you kind of type in what you want AI to build for you, and then the agent goes and starts building something. But with Gamma, when I signed up, it actually gave me 4 options. I could paste in text, essentially from notes and outline or existing content. So like paste in text, they'd make something from it. I could use the prompt bar to generate something. So like a 1-line prompt, or give it a few seconds and it'll kind of generate something. You could import an existing file or URL, or you could remix a template. And so I just liked that variety of onboarding. And then it was a really interesting on-ramp to essentially, you could make PowerPoint slides out of it in a full deck, but you could also get started with carousels, single social images. Like I think the PowerPoint messaging is a powerful brand narrative, but the reality is it's actually, I think, more of a Canva that's trying to get to PowerPoint than fully PowerPoint so far.
Yeah, I'm really interested to see how Gamma collides with Canva at some point in the future. So this is like one of those products I tried really early on, and it just wasn't at the bar for my specific use case. But they just kept cranking on it and found different use cases where the technology did meet the bar. And I see this across the AI landscape. Like they're, early on in the AI avatars, they weren't really good enough to do a lot of use cases, but the one use case that it did do was good enough was like all this internal compliance training. There was kind of a minimal quality bar, and people were just looking for efficiency. And so that's where I think it's Synthesia kind of came out and has done really well, 100 million, ARR, and where the avatar technology was like good enough. And so I think a lot of the question about AI is just where can you create a good enough experience to get above that PMF threshold where we, started this conversation. And it might start in a very specific segment of the market. And as the technology gets better, you just kind of unlock more and more adjacencies.
Either of you guys have something you tried this week?
I try a lot of things. So in the AI growth course that Kyle, you very graciously contributed some thoughts to. We have this whole module on retention and engagement and how AI is impacting different types of onboarding experiences. And so I was trying a bunch of products through that. The two that I found were most interesting that created these like really interesting experiences for me were Boardy. Have any of you played with Boardy?
No.
No, I haven't seen that yet.
You won't be able to do this because it immediately pops you into WhatsApp as an experience. But so when you onboards you, it pops you into WhatsApp, asks you a couple questions, and then says, hey, can I give you a call? And it calls you, and it's an AI voice agent. It starts asking you about your career, what you're doing, what you're looking for, like all this type of stuff. It's really like dynamic conversation. It's done in 5 minutes or less. And at the end, it's like, oh, I think I have 3 other people in the network that you'd really enjoy meeting. And it goes and pings those people. It writes really personal emails to all those people based on all of the information it collected you for in this like few minute conversation. If they opt in, then it sends like a really personal email introduction back and forth. But it was really interesting because you could see that rather than like an onboarding experience that just had form fields, just was like a few minute call, the amount of other interesting stuff that you would never be able to capture in the form fields. There was like Tolan's a very similar experience, but the product is like this alien chat buddy targeted towards a younger audience. But the alien chat buddy that it presents to you at the end is so personalized. It's not just about what it talks about, but how it talks to you, as well as other things. There was this emotional like resonance with me that was like almost like it was a WTF moment. I was like, oh my God, how am I emotionally resonating with this thing I just like created in a few minutes? So I highly recommend go try those 2 products and onboard them like you were actually trying to use them. Don't just like flip through them mindlessly. They're really interesting experiences.
Very cool examples. Well, thanks for joining us on the pod, Brian.
Thanks, Brian.
Thanks for having me.
Mostly Growth is a Mostly Media production. Executive produced by Ben Hillman. That's me. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of CJ, Kyle, and Ben. Just some guys who love talking growth. Mostly. If you like this podcast, hit subscribe. Give us 5 stars or hit like. The algorithm overlords thank you. Drink water, call your mom, and have a great day.